Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading view with over 190k reputation points. In this video, I'll speak about GBPUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly support and demand area. Starting from here, in fact, all these previous rejections to the upside were created. Every single time that the market tested this zone, it got rejected to the upside quite aggressively. And what we can notice here is that the market is once again testing the exact same zone, has already started rejecting it to the upside, and more bullish price action could be expected away from this area, as already happened in the past when the market was testing this exact same zone. So the monthly time frame at the moment does seem quite bullish. So let's keep that in mind and drop down on the weekly time frame. From a weekly perspective, the situation is quite clear as well. We went from having a weekly bearish market to now having a weekly bullish market. So we went from the creation of lower lows and lower highs to now the creation of higher highs and higher lows. So again, more bullish price action could be expected. Also here, if we look at the weekly time frame for GBPUSD, with this market clearly being in a bullish phase. We can also notice that the last move was the creation of a new weekly higher high. So the next logical step after a correction is the creation of a higher low and then yet another weekly higher high if this uptrend is to continue. So also here the weekly time frame seems quite clear. Now let's drop down on the daily time frame and see what we have. From a daily perspective, this is where things start getting quite interesting. We can notice how the market has just completed a manipulation pattern. In fact, we had an impulse to the upside, correction, then the market went higher and then dropped lower, breaking below the previous low. Now, why is this a manipulation pattern? Because as I explained many times, if there is an impulse correction, the market then tries going higher, most retail traders will start longing and their stop losses will be below the low. So if the market then drops and goes below that low, all those stop losses get triggered, creating a manipulation and liquidation event. And keep in mind that in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. So if all these stop losses get triggered, this is a massive amount of sell orders which are hitting the market. And institutions can use those sell orders to actually buy. And that is why most of the times, after an M pattern, the market tends to create a rejection to the upside. We can see, for example, here, we had the exact same pattern. The market created the manipulation, hunted all the stop losses below the previous low, and then we had this massive rejection to the upside. So there is definitely the possibility to see this more institutional longing away from this area. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. So essentially the non-commercials. Now, if we look at data for the GBP, we have to keep in mind that we are actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And we can see that with the last reports, we went from minus 21.6k net positions all the way up to plus 29.4k net positions. So we had a massive increase of net positioning, showing how institutions went from having a negative net positioning with more shorts than longs on GBPUSD. In fact, they had 81,000 shorts compared to only 59,000 longs. Now we're getting the complete opposite with a positive net positioning and more longs than shorts. 95.9k longs compared to only 66.5k shorts. So clearly institutions have moved back to the bullish side for GBPUSD, therefore making it stronger. So let's keep also this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So here on the daily time frame, what we have to keep in mind is that the high here is currently still acting as resistance. Now, until the market will remain below this level, it can easily continue lower, because what we know is that a previous level of resistance, unless it is broken to the upside, remains resistance. But if the market will actually manage to break above the zone, that is where things get interesting, because a previous resistance, once it is broken to the upside, becomes support. So if we will see this break and retest at that point, there is good probability inside of this area to see more institutional longing, which at that point could further increase the probabilities of getting a potential rejection to the upside away from this zone. So if the market will break and retest at that point, what would I expect? Well, as usual, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily time frames, those are the best time frames when it comes to the directional aspect of the market. But when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.